Hello and welcome to week number 2 of the year. Starting off the weekly analysis by having a look at the CFTC position. Looks like there was quite a position squaring from pound bears. They squared quite considerably. Same thing on the euro side. So we saw some of those movements materialize last week. The data wasn't updated yet on Scotiabank, so I'm just using EFX. And just to see the figures and really what changed, and these two stood out. Yen as well looks like bears are squaring the positions. That's sort of driving market about last week or so. But first thing I like to have a look at is the yen pairs, because they did some very interesting last week. So the orange line is ADJPY, and it's overlaid with inflation expectations, so the 5-year over 5-year. As you can see, AED-JPY really closely correlates with that. Most recently, extremely correlated. In the past, it was, I like to think about probably 75% or so. Still very strong. And basically what market is telling us, inflation expectation peaked about the 3% number. It's unlikely to breach that, or not from what we know right now. It also means for AED-JPY to kind of find it sitting around these levels, and that's why you saw this dive coming through as well on about, I believe it started off about early in the week, and ADJPY reacted to that, to the inflation expectation drop. I'm expecting this whole thing to keep kind of resolving, so maybe chop about. It might be a two-sided market around these levels, but eventually resolve to the downside as the business cycle is kind of cooling as well, and it makes more sense to be short these risk on or cyclical currencies. I like to say that. Some to keep an eye on as we navigate for the first 3 months or so of the year. A lot of things become clearer. Another thing I like to look at is GBPUSD. Now, next week we're going to have my most favorite data point of the month, which is US CPI, which is basically inflation. Just to show you on the Forex calendar here, that will be due on Wednesday, 1:30 UK time. Might be different wherever you're living on the globe. The data itself, what number pops out or chunks out of the machine, is important for economists, but for us traders isn't really that important, because we're not really waiting for the data to tell us which direction to take. We kind of like to have a direction in mind already. But before I tell you what direction I'm looking to trade, I like to have a look at what the sort of the past experiences was with the US inflation read, and also how GBPUSD reacts to it, because it's probably one of the currencies that creates huge moves after the CPI read. So I've digged out the last 12 months for you. I've placed like this vertical faint cream lines over it, if you can see it, starting off with 2021, January 13. So we saw the US CPI read come through. We had a bit of a down move, then play about, and then eventually moved higher. So I wouldn't call this really a big inflection point. By that time, market was already thinking, okay, we want higher GBPUSD. But come move on to February, and that CPI read did create an extremely well base to create this rally after that. And we had something similar again in March, where it did create a platform where actually things rotated off. So you can see the levels that the CPI created is quite important. Moving on to April that same year, and it created that lovely pin bar, very small in stature, but it did sting. So it did push the whole thing up a good 300 pips from that level onwards. Again, inflection points, that's what I'm trying to drive home here. But then some interesting happened around May time. Around May time we had this little drop, and then we faded the whole thing above. The reason was we were kind of creating the choppiness that was in the summertime, leading up to this move, which was incredibly interesting, because I was trading live at around that time, and I was thinking to myself, there's no reason GBPUSD should be here. The CPI reaction was as fake as anything. And really, I'm looking to short this thing. So mind you, that CPI usually dislodges these sort of choppiness in the market. So I'm thinking, okay, we have this move up, but I'm looking to short. Let's see what happens. I know it's going to break away from now on. So if it wants to break higher, I might be wrong in the analysis. You never know. These things happen. And then boom, it finally comes home. And this huge drive lower comes. And do you see these daily pin bars? They all keep playing off the same day that CPI created. Incredibly important. Then we had like July kind of followed up in August, and then it did some similar in September, and finally in October we saw a bit of turnaround where the CPI created a big bullish move, and then it was followed by another 300-400 pips from the base of it. It was about, let's see where that kind of ended up. So from the base of it was about shy of 300 pips, so 250. And I played about, and every single month, again, you can see every single month it does something very beautiful. It creates big springboards. At least it gives you a level you can work with. And now we have this coming up again in January. I'm looking to trade it obviously live. Right now, GBP has got a lot going for it, but fortunes can turn if things don't come together. One of the things that right now is pushing GBPUSD high, or GBP across the board, is obviously the yields on a short-term basis, because everybody's thinking that the Bank of England will be raising rates up to 1%, and that means that the 2-year yield has got room to move higher. So that is the consensus trade that everybody knows. It's nothing new I'm sharing here. But some that would be able to drag GBPUSD lower after the CPI would be a mixture of things. One, the whole idea is because on the same day we've got one of the Bank of England members speaking, if I'm not mistaken, so on Thursday, Wednesday, when is that? So Cunliffe speaks on Wednesday after a CPI report. I think that will add flavor to the direction we are looking at, specifically after the London fix. So the London fix every day is at 4 p.m. London time. That creates a sort of a zone I can work with, and then whether I'm looking for shorts or longs. Last week I was quite bullish, and that kind of played out fairly well. Unfortunately, I started trading EURUSD instead of GBPUSD, so that didn't trade so well, and I'm going to go through that trade in a second. But overall, what I'm trying to say is, in regards to GBPUSD, I can expect a big strong move coming up next week. However, I'm inclined a bit on the bearish side if things don't go that well. Either way, if it wants to move up the way, I'm quite happy to keep buying it. Some that will resolve on Wednesday or going into Thursday. But let's have a look at EURUSD, because that's the trade I was interested in last week. So mind you, I did my analysis. The analysis was that, look, NFP is not going to be as strong as market thinks, and because of that, market will be selling USD ahead of time. That was my idea. They're not going to wait for data to print. Now come NFP and it prints and misses data, and then EURUSD starts its climb, 60-70 pips. This is the kind of move I was actually looking throughout the week, which didn't really work out that. But actually, let me take it back down to the hourly, because that's where I kind of entered and managed the trade. So we're starting off the start of a year. Sunday open, we have this dip, and I'm trading here around Monday London time. I'm thinking, look, I'm bullish. I'm expecting a bullish reaction from EURUSD next week, and this dip is a gift. I need to buy into this. So I buy into one of these lower wicks, quite really sharp entry, and the moment I enter this trade, goes straight 20 pips in profit. I say, great. That's not what I was looking for. I'm happy for it to play about. I'm really looking for higher levels, level-headed, feeling good about myself. And then reality starts kicking in, and you see this mad dive out of nowhere hitting you in the face. And mind you, my stop loss this was a swing trade, so my stop loss was actually at 1260, below, about 10 pip below this orange line I've drew, and I don't even remember why I did that. So this starts diving, and I'm trying to scour information. What's happening here? Am I wrong about the trade? Should I get out? The entire time this dip was happening, I saw it happening, but I didn't think it's going to be that aggressive. I thought maybe it's going to dip about 20 or 30 pips from where it is there. And before I know it, it's down about 60-70 pips. And I'm thinking, oh my God, what are you going to do? So I see this reversal happening overnight. And so I'm spending a good 10-12 hours here, keeping an eye on this trade. So I see this reversal happening here, and I cut my losses short. So I take about half my loss in half an hour, if you may, and I'm out of this trade. But I'm still monitoring the whole idea, and it starts doing these crazy moves overnight, and everybody thinking, oh, new lows are coming, and everybody's saying EURUSD 110, but I'm not feeling it. Then we see this kind of spikes coming, and nothing really made sense to me what's happening with EURUSD, because I'm still thinking, look, market just wants to shake you out, and the big move is coming on Friday. But then Tuesday comes and Wednesday comes, then something happens on Wednesday night, which is the Fed minutes, and it reveals that Fed is thinking about hiking rates in March, and then boom, you get this move lower. So I'm clocked that in. I didn't want to trade it there because it was late in the night, so I'm thinking, okay, I got you. All right, I'm ready to switch narrative here. I'm ready to go short. And around the London fix time, or when it was actively trading, I started actually shorting. I started shorting at 13. I believe 14. Yeah, that was about the level I got in. Quite a sharp stop as well, because I kind of figured out, okay, that's the level we've played out this one, so this last wick should be fairly safe. So I think I ran about 15 pip stop, something like that. And again, as you can see, smooth trade, everything went well. I'm thinking, look, the first area I like to maybe think about taking profits about 12.85, 84, So we trade about this level at 86. I'm thinking, no chance this whole trade starts reversing 1 or 2 pips from where I want to take profit. And you know what? Captain Hindsight says, yes, exactly, that's what's going to happen. So I'm trying. I have this short running here, and I'm thinking, I'm going to get this push. There's nothing new happened here that should reverse back. But I'm starting to move my stop a bit lower, Better be safe than sorry. Specifically, I didn't want to sit here overnight. So what happens is overnight, I see the thing getting pinged, and then Monday, morning of London time, I'm thinking, what is this doing? By the time NFP came, everything became clear. Look, the whole trade you were looking in on Monday is starting to play out on Friday. I wasn't on this trade anymore. So I just wanted to run you through this whole emotional carousel I had with EURUSD last week, and maybe bring in psychology a little bit into the conversation, how my psychology worked to just not get frustrated, because I always have other assets to play with still. EURUSD wasn't the only thing moving, but just how to stay level-headed and not keep firing in trades left, right and center, and don't start to get frustrated. Because very early in my trading career, when things like that happen and market just didn't do what I needed to do, or went the other way and then went my way, I really felt like impulse trading and bubbling up. So now when I see these signs like, oh, things are not going my way, can I maybe resolve it? Maybe can I save it? Can I save the trade in a way? I start to navigate in a different perspective. My risk management becomes a bit more proactive, but my trading activity sits back a little bit, and I start to be a bit more conscious about, look, market is a bit choppy, and maybe the whole trade idea is still not dead, but it's starting to do other things. New information started popping in on Wednesday night, and that kind of stuff. So really what you want to do as a trader, what I do as a trader when things don't go my ways, I start detaching from the whole situation that this is not my fault, this is dropping. The market is doing what it wants to do. Maybe I'm on the wrong side of things, and you start rethinking things. Specifically if you're on a swing trade. In a swing trade, all of this was acceptable, but what wasn't acceptable for me is why is these sharp moves happening? I didn't understand this. I didn't understand these reversals from the bottom, and so for that point of time, for me, was the best thing to get out. But it doesn't mean I should keep forcing trades, new ones, Or every trade idea has got its own path and its own flourish, and should give it time to play out. And sometimes you're best to maybe get out of that trade, so you're a bit more level-headed and you can engage in a new one. But it's really important to see these feelings bubble up, because a lot of us go through a trading week or a trading day, and we don't realize all these things that just went unnoticed, like the feeling of, oh, did I just miss out on a short trade because I was long? Or maybe I should have cut my losses. Maybe I didn't, my position size wasn't too aggressive, we just dismiss these things. But if you're a bit more proactive about the feelings you have throughout the day, how the market makes you feel about things, and it's really hard to say these things because most of us, we're just traders. We're like, oh, I'm an alpha male. I don't need to bother about my feelings. But without your feelings, a bit rudderless, isn't it? You're not sure what you're doing if you don't understand what your feelings are down the surface. So I guess what I'm trying to say is about this EURUSD trade is being in tune with what's happening in the market, and also how I feel about these things. Was given the opportunity to cut my losses here, even managed to bang in a short over there. It ended up not doing a lot either, but at least I didn't get chopped up too aggressively, because a lot of the times this one loss here can turn into a huge downward spiral. You could see this huge move and think, oh, I'm wrong, and start keep shorting. So all of a sudden this is all back to normal. Pretty much EURUSD didn't do anything last week. It did a dip and it's back kind of where it started. But it could do a lot of damage to yourself, mentally, to your account, if you were not tuned in to how you feel about things or what the market is telling you. So hopefully this video made you aware that you need to understand what's happening in the market. It's incredibly helpful if you know how you feel about things, so you don't do stupid mistakes throughout the trading week. I'm going to quickly wrap up by saying 2 or 3 more things what's going to happen in a week ahead. So again, CPI for me incredibly important next week, which should create sort of a swing trades. I'm interested to see the price action following the Fed testimony, specifically on USD JPY. It's one of the pairs that's going to be a little bit more volatile, usually about Fed speakers on Tuesday. But on Friday, I have a couple of really interesting things. One of the things I like to look at is the UK monthly GDP. So I'm really interested to see what happens here. If the mood sours here, I might actually pile in some really decent shorts on GBPUSD or any other GBP pair. But if not, I will wait for the retail sales to come through from the United States. And I have a bit of a pattern here where we had kind of a mixed, kind of positive, and it started sloping up in December. If that slip up continues on Friday, I think risk is going to sell off aggressively, and that would be really good to short indices. Think S&P short intraday if things blossom in the way I want it to be. So it's going to be a bit more of a things need to line up to get a bit more aggressive in the back of the week. That's all I wanted to cover. A bit more longer video than I wanted. Really wanted to explain the dynamics of what happens off the charts in a trade. Specifically when I looked at EURUSD, that ended up being not a fun trade at all. But it's important to know these things. When you know yourself, you better understand the market, and you're more likely to be profitable down the line. Again, that's all I wanted to cover. I wish you an incredibly successful week next week. Mind you, US CPI is going to be main mover for you next week. From there on, things going to unlock. So I'm hoping before that you can stay vigilant. Don't use all your dry powder too much. And I'm going to catch you all next week and again. Thank you and bye.